You're
Welcome.
live.
We're live, everybody. Welcome. Yes, we got to start like that, Matej, just like in our collab, which I got a lot of great
Yeah.
feedback on. Thank you very much. Welcome to Pixels and Profits. Today we are here with Matej Lancaric. Lancaric.
Nice. Nice. Yeah.
Lancaric.
Getting better. Yeah. Good.
He is a mobile UA expert, host of 2.5 Gamers, both a newsletter and YouTube channel, so check that out. He is a world traveler and also recovering from COVID. And
Yes.
today we are here to talk to Matej about the state of mobile user acquisition and more specifically, the impact and potential future impact to game companies, including public game companies such as Unity, Applovin, Facebook. What will the end of things like IDFA deprecation and now the end of digital fingerprinting do? We'll talk about that. But anyway, welcome, Matej. How you doing?
Thank you very much.
Today's episode is sponsored by Data.ai to access estimates for rankings, downloads, revenue, usage, or engagement for millions of apps on the App Store and Google Play. Sign up for Data.ai.
Yeah, getting better.
Okay.
My voice is still not. Still not 100%, but it's way better than last week when I was laying in the bed all day long. So COVID is not fun. It was my third time. I guess third time is the charm. So let's see. But yeah, last year again in August before Gamescom, I got COVID out of nowhere. This time before Gamescom, but the timing is better. So let's see if I can make it actually to go on this year. So yeah, I guess August is my COVID month. Anyway.
All right.
I think UA is dead. We can end here. Thank you very much for listening. Shortest podcast ever.
Thanks for joining.
Thanks for joining. This is great.
Okay. Well, I thought maybe one thing we could do is just start by going over how UA has been done before and now today and kind of the changes that are occurring. And again, the potential impact of some of these companies that we follow quite a lot. Such as Unity and Applovin and Facebook, as I mentioned. So maybe I could characterize in simple terms my understanding of how it was done before, and happy to have you guys jump in as well. So back in the day, it used to be that a lot of companies would spend UA based on kind of like a percentage of revenue, whether it was like 20%, 30%. Sometimes the higher you took it, the more aggressive you were trying to be. And also from public financial statements, we could see that the spend was something like 20 to 35% of revenue in terms of like UA and marketing spend. In fact, actually, I got a lot of my numbers from looking at Glue financial statements. Brian, you were kind of at Glue, but that was roughly the range, right? Like something like between 20 to 35% from those old public financial statements.
Yeah, so whenever you're looking at a public company like that, it was a nice read from Glue since it was smallish. You got a good read on revenues and UA spend. I would say the one difference there is you're seeing numbers in aggregate. So it's not necessarily giving you the numbers that are spent per title. Yep. And one of the, good things about being a diversified publisher and developer of mobile games, if you want to call it that, is that they had a few different levers to pull in terms of which games had better ROI and they could shift spend around in some certain kind of range. But yeah, depending on the growth objectives of the company and how you're managing EBITDA, that range that you said, 20 to 30% on aggregate across a portfolio is quite good. And, for launches and things like that, it could go way up or way down depending on the life cycle of the game.
To say.
Oh, cool. So get in there, man. Let's go.
No, because you're saying, you're talking about 20, 35%, but what is the life cycle? Like, when is this happening? Because now, honestly, I'm working on a game which launched 4 or 5 months ago, and we're making 150K a day. We are spending 120K a day. So it's way more than 20%.
Yeah.
Way more than
20%. And if you look at like some of the data from whether it's Sensor Tower, Data.ai, and I personally look at the Data.ai numbers, but you're seeing some of these companies, and we talked on our collab, Matej, about some of these companies who are spending, a huge amount on paid user acquisition relative to organic.
We just talked about Monopoly Go on our podcast last week as well.
Okay, nice.
It's just
nice.
It just kind of goes back to our. Oh, sorry. Go ahead.
Yeah, it's also crazy how Dream Games is or Royal Match is now just outspending Candy Crush as well. Jesus Christ.
It's a good instructional read on what we talked about a couple episodes ago on cost of capital and whether or not you're a public company, right? So everyone has their own growth objectives and how far they're spending out in the curve. For a public company like Glue, it was pretty much impossible to go above like a 1.5 to 2 year payback, just given we had to show profitability at any point in time. But
I
Dream, not the
remember,
case. I think 5 years,
I
six
remember the
years.
days. Sorry to jump in. I remember the days
Nope.
when Glue said that they can't spend too much money because Playrix is spending everywhere, and it's just like so expensive that they had to just pull back to spend.
That is
Well,
correct. Yep.
yeah, I think that was in reference to there was that UA war between Playrix
Yeah,
and Matchington slash Applovin,
exactly.
right?
Yeah, exactly.
Yeah, that was that was a pissing contest that really like sunk a lot of people.
It's also
Both of them went
cyclical
privately
for
and
private
still are. Yeah.
companies. You know, if the grapevine is correct that Dream is raising money again, it makes sense that they're juicing UA
exactly.
to juice the funnel, to juice the top line, to raise more money. So, like, you know, private companies, they don't have the quarterly reporting cadence, like we said. You know, investors slammed Glue, they slammed Zynga every time the margins weren't good enough.
Yeah.
Private companies, all they need to do is show the top line growth to raise more money and keep that going. You know, you can look at it positively, you can look at that cynically, but either way, you know, if that is going on, it makes sense that they're spending really aggressively right now.
Yeah,
Right.
and we don't know about profitability at all. We just know like, oh well, they're growing. Is it profitable? Nobody
Right.
knows. Maybe no.
Right. So going back to like the history of UA, and so like a couple of concepts also that were mentioned. So payback kind of period would be like the amount of time that it takes. Like if I spent $5 to acquire a user, then how long will it take me to make $5 back in my game? And so there's also this concept called ROAS, or return on ad spend, which is basically at a certain it's a DX metrics, meaning at a certain day, like day 7, day 10, day whatever. What percentage of that $5 that I spent do I have back, right? And so basically, there are certain games, and like some of the examples that were mentioned, like Matej mentioned, dream games, for example, match 3 games. Some of these players in these kinds of games could be playing forever, right? And so,
Yeah.
even though like Brian mentioned, for them, payback might have to be within 1.5 to 2 years back in the old Glue days. If you have a game that's like a match 3 or something that lasts forever, you could potentially just hope for you'll be getting paid back over a period of time. But if you miscalculate, then you can be really hosed. Like you could spend $10 and only get like $2 back, and then you're kind of hosed. So, and that did happen in terms of like a lot of companies did have aggressive models. When the McKinsey guys come in and then they say, well, yeah, actually the growth.
Yeah, this
Anyway,
looks pretty good on paper.
yeah.
Like, let's
It,
extend this a little bit.
but funny enough, in spreadsheets, a lot of games could be made profitable with just adjusting a few numbers.
Exactly.
Anyway, so kind of like what used to happen in terms of like spending on based upon a percentage of revenue shifted with Facebook when they came out with these products like AEO, app event optimization, VO, value optimization, which basically would allow you to target players that are whales, and to actually having some products where you're trying to target specific ROAS. And I think that even with IDFA deprecation, some of these ROAS products still exist today, right, Matej? Like I believe that. Yeah, like Applovin, TikTok, Unity.
Even on
still
Facebook, man. Even on Facebook, you can
Oh, really?
you can run. Yeah, of course. You just need to have the scan conversion schema and the target revenue. And when you have revenue, you have purchase event, and then you just select like different increments. So basically, you have 64 bits that you can work with, and then you have $1 increments, or based on your analysis on the day one purchase power, or just whatever the player can purchase on the day one. It can be either like 200. So usually you have up until $64, but you can extend that to 200, 500, whatever. If you have this, you can use the purchase optimization and even value optimization, which is still possible on Facebook. It's
for now, until fingerprinting is killed off.
And even even on fingerprinting. I mean, look on Facebook.
Because you're saying, okay,
yeah,
but do you have to have an SDK to do that?
That's the thing. So there's this like mixed messaging. So Facebook says we have this aggregated event measurement program, which is now live, like amazing, almost real time reporting on iOS. Wow, I mean on paper again looks pretty good. You have to have the Facebook SDK inside, or you can use MMPs. AppsLayer doesn't have it yet, so you need to wait a few weeks. Adjust has it, and Singular is now rolling it out to every client, which also takes time. So
Okay.
the safe bet is Facebook SDK because obviously
A
Facebook
lot of old
SDK is
people
great.
have Facebook.
True.
So,
And also, Firebase and Google, same thing. If you have Firebase, you can run pretty interesting campaigns on Google Ads. And, they're working together as the same Google product. So you have better results. That's what
okay.
Google
So
claims. But
I
you
mean,
actually see.
I guess we should go into it later, but it sounds like what
Yeah.
you're saying is even after fingerprinting is killed off, the UA market may still be kind of okay in terms from a targeting and kind of AEO, VO, that type of
Because
product may still exist.
no, that's not going anywhere. The targeting kind of shifts from the old days of interests and lookalikes, basically, to the event-based targeting. So you are using these events on the campaign level, which is purchase. You can use whatever else engagement events. So I don't know, level 20, level 200, tutorial finish, whatever else you can use for growing DAUs of the game. But then
Okay.
everything comes down back to purchase and value.
All right. So
and I think some of
mhm.
the UA channels will be impacted more. So if I'm looking at the UA landscape at the moment, so Facebook was always the greatest channel, and Google. Facebook
Mhm.
dies or is dying slow death. So now it's Google. It's up there for Android, but there is Applovin, and everybody's like, oh well, Applovin is going to die as well because of the fingerprinting. Well, no, unfortunately or fortunately, no. They're claiming they're doing something on their end. I mean, you have all these modeled conversions. They have the biggest advantage, which Ironsource doesn't have, is the max. If you are on max, you can use blended ROAS campaigns, ad ROAS campaigns, and it's based on different days of ROAS. So basically, the blended ROAS is combining ads revenue and in-app revenue. You
Right.
don't have this on Ironsource, or maybe you
Right.
have but not blended. So that's why
And
this is like they're getting all
right.
the information from Max.
Right. And for our audience, Mate, could you explain what Max is?
Max is a mediation. So for ad revenue, you are plugging in different ad networks, so you can
Mhm.
squeeze the most out of the ad revenue. So you're using mediation to have different networks. So Facebook inside AdMob, Ironsource, even Applovin, Unity, all of these, and they are bidding against each other, so you can earn more money.
Okay.
But do you
So
think on the margins, this would be more beneficial, the changes coming into large existing games over new launches, or no difference?
I think larger games, but then, as I mentioned now, I think the game that I manage at the moment, we have 80% spend on Applovin, which is a little bit dangerous, but it's unlocking a huge scale, and it's still growing. I'm used to see after a global launch there is a peak, and then it's kind of declining 1 or 2 months. We are still going up in like 4 months and like scaling seriously day by day, thanks to Applovin. And this is a new game. So if you have the good setup on the game, it doesn't matter if it's small or big. That's what I think
okay.
at the
And
moment.
how trustable is AppLovin these days? Is it
And
no
there are
longer
differences. Yeah,
hi
yeah,
Joe
yeah.
game, hi Joe data?
It's when I'm looking at let's say the internal data and the data they
Yeah.
have in the Applovin dashboard, there are differences because day zero for me is definitely different for day zero what they're having, and you never know. But I think I heard
Okay.
some rumors that they are actually selling their gaming division, or I don't know if it's
Oh
true
yeah,
or not.
that's been in the works
We'll
for a
see.
while.
We'll see.
Yeah, yeah,
So
yeah.
this is. I mean, I was in Seoul and I was looking at some of the information that they shared. The basically the share of um, publishers and developers there on Max is just like going up. It's like it's
Mm.
150,000 developers at this point, which is
Wow.
huge. It's huge.
Okay.
It's they're improving it so heavily that you can if you're not on Max, you are missing out on the UA side of things like quite heavily. Honestly,
Yeah.
that's the thing.
Right. Yeah. Sounds like
So
it was a good acquisition. I think that was like 3 guys, right? If I remember correctly. But
well,
anyway.
anyway.
All right. Okay. So back to the story, guys. So you started in the old days with UA spending on a percentage of revenue, then kind of shifted to these more sophisticated things once Facebook came up with products like AEO, VO. And then you could do even more sophisticated things like ROAS targeting, things like that. But today, I guess, and kind of what we were talking about, and I apologize to the audience, we've been kind of jumping around all over the place, but today we're kind of in this kind of market in flux where it's like, if you kill the ability to identify users, you can't have these sophisticated products doing things like AEO and VO. And so that's kind of like the big question today. And I think what we want to do is probably just, I think we've got a number of questions. And so for the audience out there, if you're interested in the user acquisition landscape and what the potential impact of some of these things to public companies could be, that's why we brought Matej on here. And actually, maybe I could kick it over to you, Matthew, in terms of just starting this Q&A with the UA master.
Yeah, we're here today to figure out if UA is dead or if this is long-lived UA.
It is dead, yeah. Please don't do UA. It's fine. Don't do it.
I think Brian kind of laid it out, with some of his history from Glue, but I pulled some numbers from a smaller mobile game publisher that's still publicly listed. There's not too many of them anymore, so it is hard to find like good data, but G5 is listed in Sweden and they still break out UA spend as a percentage of total expenses and revenue. So looking at them, and again, by no means a proxy for the industry, but we can look at the trends and how it's shifted over the last few years. Pre-COVID, they spent about 27.5% of revenue on UA. So that's quite, it's in that range of 20 to 25. But for 2020 to 22, they spent just 21.9%. And then in the first quarter of this year, it was below 18%. So they're really pulling back on UA in the last few years. I think there's a lot of reasons for that. The top line grew more. They haven't launched as many games. There's lots of their seasonality in the first quarter that they maybe pull back on. They didn't have, so lots of things that move the needle. But I think overall, the trend is that they're spending less on UA than they did in the past. So I guess just what you've seen, particularly working with smaller and mid-sized game developers and not the giants, what have you seen in terms of budgets? How are companies thinking about UA spend and prioritizing, profitability versus growth?
Very good question. So usually what I see at the moment is shorter payback periods. So you mentioned 2 years. Not everybody can afford 2 years. Also different genres, different payback periods. But now
different era too. Yeah.
Yeah, and I usually now try to aim for payback like 30, 60, or 90 days because, times are tough. People want to have their money in their bank account because if something happens, then they're kind of safe. And this is also the case for this game that I launched. I didn't launch, but I just jumped in recently. We are optimizing for day 30, 100%, and still can spend 120K a day. It's very aggressive goal. It's a very aggressive goal, but that's just how it is. I mean, we don't want to move to 60, 90 because it's very tricky. I've seen this situation. It's like, the numbers are amazing. Let's just scale more and then move the payback period to 60, 90, 120. And then, like JK mentioned, but the prediction wasn't that great, and then we're not going to see the money back anytime soon. So I'm seeing shorter payback periods on some of the games I manage. It's not always 120K a day, but it's lower budget, obviously. If you're aiming for short payback, the budget goes
right.
lower.
Hey, Matej, can I ask you kind of a more tactical question? So you're spending 120K a day with a target of 100% payback in D30. So 100%, like ROAS by D30. So do you, when you're adjusting the daily budgets, do you do that based upon like a D3 or D7 to D30 multiple?
D0.
D0.
We have D0 goal 20%. If we are above 20%,
okay, that's like that's you're playing Vegas.
yeah. I mean, yes and no. And no, but there are some multiples between day 3 and day 7, obviously. Sure. Yeah. But the day 0 20% kind of is the curve where we need to hit 100% on day 30.
Okay.
And honestly, so I started when I started working with this game. No Facebook because it sucked. No TikTok because it wasn't performing well. Now Facebook is getting back on scale because there wasn't a good creative, honestly. So we tested like 20 different creatives and found an angle that works on Facebook. on TikTok. Now it was basically zero. Now we're spending like 10K a day out of nowhere thanks to the TikTok Creative Challenge. So you have these like small bits here and there that can help you unlock this scale. And then like right now it's day zero profit. It's like profitability is like 200% because of the creatives.
Wow.
It's
Matej,
just
what are you seeing on? I'm sorry,
crazy.
the revenue skew on these games. Are they indexed more towards ads revenue or IAP or a little mix of both?
It's 50-50 or 60-40 towards ads. And that's why
Wow. Okay.
the short payback period. If
Yeah.
if it's skewed more towards IIPs, then it would be a little bit longer. But I know I work with one game that right now is aiming for 2-year payback period, and we're spending like 5 million a month and 10 different channels. 10 different channels. It's just you need to diversify to almost everywhere if you want to scale. And sometimes it's on 1 million a month. Sometimes it's on 40-50K a month because you hit the ceiling. So you need to add these channels to your UA mix to be able to, to grow the game. And then maybe you will have 5 channels for 20K a month, and then suddenly it's 100. So you need to stack this up. So yeah, it's definitely not dead, but it's just it's getting harder.
Yeah.
But that's the part of the job. That's the part of the job.
So you often hear about like the demand side and supply side of the advertising market. So could you give us a quick overview of the delineation here? Like who are the major players on both sides, how they interact with each other, and how they make money?
So you have like I said, Applovin, you have Ironsource, you have Facebook AdMob, all of these big UA networks. They are having also like both sides of the equation, UA and ad monetization. Basically, the biggest player now is definitely Applovin. Then you have Ironsource, and then you have AdMob, which is a mediation, but it's just it's not good. Honestly, sorry guys, it's not good. Uh, and uh, and they are just man. You could see the war between Ironsource and Max. Like they're trying to pull the clients and developers from each other, offering deals, back channel deals and everything, which usually kind of is interesting. But then some of the some of the developers don't understand what those deals mean. And even if they get, let's say, 200K upfront cash, it doesn't mean that the other side is better. But yeah, anyway.
You mentioned this briefly, but like so two of the major players that investors know about, given that they're public, are Applovin and Ironsource. So I guess what are the competitive dynamics like between these two companies, and is it really a situation of eating one another's lunch, or is there room for both of them to grow at the same time? I know you just mentioned this too, so you can scold me again, but just dive a little bit deeper into that.
No, I think they're definitely eating each other's lunch, but Ironsource could grow on the UA side, but it looks like they're falling behind. Like Max is like way ahead, and Applovin is way ahead of them. They just worked really hard in the last year to introduce different campaign types. So as I mentioned, you can target purchases and payers. You can target ad revenue and ad ROAS. You can target both. Ironsource doesn't have it. That's super powerful for every game out there that has both ads and in-apps. So these are the biggest advantages. And if Ironsource could potentially bring this onto the UA table, it would be very interesting. It would be very interesting. Unity has this like hybrid ROAS, but they don't have the very powerful mediation, so it doesn't work like that great as Upline, for example. And you could see the upline growth right now.
Just given like that this space in general has been going on with like constant change and iteration and a lot of kind of volatility, does this, in your opinion, lead publishers with an incentive to launch games now? I mean, I'm not saying like unpolished games or whatever, but are they trying to launch campaigns actively, maybe thinking that this is the last kind of chance before there's a major shift in the market again? And would that have some sort of impact on pull-in, like seeing really good quarters that may not repeat themselves?
Yeah, I mean, these great quarters definitely didn't repeat themselves afterwards. It's just getting worse and worse. But there was never a good time in general, like to launch a game. Maybe in January, every January and February, March is kind of like a good situation for UA always after the Christmas. But I'm seeing not, like you said, unpolished games, but games that are good enough to put it out on the market, to get data, and then just improve on as you go. Which means like 90% finished game, and then developers are adding new features. So I mean now it's not gonna get any better this year. So if you have a game, launch it now, and then just try to try to work on it quite heavily.
And guys, I forget, is like the end of fingerprinting, has there been a definitive date set for that, or is it still
I think at the end of the year.
end of the year?
We definitely
Okay.
never know.
Yeah, it would
So
be calendar Q4. Some I'm hearing like end of October, mid of November, something like that.
Yeah, I heard December
Okay.
as well. So it's like,
So all over
So-
the place. Q4.
So Brian, are you suggesting buy these ad networks before in that quarter and then sell after that quarter?
Well, look,
Something like
it's complicated, right? Because it has a lot to do with sentiment and positioning, and those aren't getting any easier given the tech tape right now. And we can certainly talk about that a bit. But right, like if you think that publishers are incentivized to launch now, and there's a robust business that may not repeat itself, like sure, there's companies out there that are publicly traded that are unilaterally exposed to the UA environment, or at least 50% of their revenues or 100% of their profitability are indexed to those themes. It's like keeping on track of competitive dynamics in that space, and also just the overall health of that UA channel is going to be extraordinarily important for them. But then you have do you think management teams are going to be straightforward about these things? Are there other designs and mobility for what they think they want to do with those companies? Are they going to acquire things? Are they going to sell themselves?
I mean, they were grossly not transparent about IDFA. Every single company basically lied to investors' faces about IDFA hurting them. So how can we?
So if you took that position 6 months ahead of time, you made a lot of money. But those trades can beat you up in the face over time too, because they are by and large heavily shorted names.
In the last 3 months for a lot of people that were shorted. I mean, a lot of short covering has happened across the market. But yeah, totally.
And I guess in the private markets too, we were just talking about Dream and some of these other companies that are spending out on the curve maybe 3+ years. What that is hoping for is that there is some normalcy and complacency that pushes the M&A landscape back to what we saw in 2021, 2022. Like who is going to pay 3 to 4 times revenue for a business that's not profitable but has extraordinarily solid top line growth? And everything that I'm seeing in the space, I don't have a good answer for that.
Except the Saudis.
Right. Scopely is able to pull it off. Right.
Yeah.
So that's a good hope trade.
So Matej, in that context, and let's get back to this question. So once fingerprinting,
I did just want to jump in on. I believe that fingerprinting is getting killed by iOS 17, right? Which is still in beta. That's the privacy manifest that Apple's calling it.
Yep.
Usually, Apple launches the new iOS when they launch new devices right around that. So end of September, early October, plus or minus.
Okay. So I think the important question to then try to get a perspective on is when fingerprinting does go away. So Matej, we were kind of speaking at the beginning of our conversation about the potential mitigation to that, basically by some ad networks having an SDK, being able to pull data. I don't know how okay that is with Apple or not, but so could you, what is your perspective? Like fingerprinting is gone.
Yeah.
In theory, when you have no IDs, you should not be able to have these AEO-VO products in theory. But
In theory, yeah.
what are you saying is going to happen in your opinion?
In theory, in theory, like the UA is dead for 10 years already. So, but you have everybody's now doing the modeled conversion based on the whatever data they have. And if you have shit ton of data, then you can model almost everything. And Facebook has their own SDK, Google has their own SDK, and even if you scan, and you can model out those conversions based on the day one. And there's Scan 4, which is coming. I mean, Facebook rolled it out and then pulled it back because it was such a big failure. But that's gonna open up like some new potential opportunities, because you're not going to look at the day one only, but you are going to look at the day 7 postbacks and day 35 postbacks as well, anything in between.
So I guess in the vein of what you were just describing, Apple building an ad network, could you argue that's good for game developers? Because theoretically, they'll privilege their own ad network with their own data, so you can bring back user targeting. You just might
Yeah.
be paying for it, so it'll be more expensive. But on the same time, the return on what you spend there could be really good. Is that kind of how you're thinking about it?
Yeah, I'm thinking about it exactly in that way. And honestly, I don't care if I need to spend more and get the same or hit the same target ROAS goals. If it's TikTok, Applovin, Unity, whatever, I mean, I don't care. Honestly, I don't care. If that helps me grow and help the game grows as well, it's fine. You have Google; they have their
I'm
own ad
personally curious.
network.
I'm personally
They have
curious to
their
see
own
how it
ad
plays
network.
out, because I
Me
think,
too.
Google gets antitrust all the time. People are always talking antitrust with Google. And part of it is this reason, right? It's the tie-in between the products and the ad network. And I'm curious if Apple, because I mean, this has been rumored for what, 2 years, and we haven't really
Yeah, I
seen
know.
anything about an ad network. Like, I'm curious if, the business folks, the product folks, and the policy folks are all kind of debating, how do we not cross a line that's going to get us in trouble here? Because Apple has kind of, I think, with the App Store, yes, they've gotten in trouble, but like kind of, I think less than Google, they've had antitrust focus on them. And I'm curious if that's a gating factor for them entering.
Facebook has its own issues with privacy as well. They're just paying fines here and there. Nobody cares. It's peanuts for them, right? So, Apple is now perceived as the privacy-focused company thanks to all these changes. So, they're already building this narrative for a while.
And while we're on the subject of antitrust, one of the things that's happened because of antitrust focus has been the opening up of app stores to a degree. Game developers are now pushing web shops to, for purchases to drive adoption. How is the growth of web shops affecting the UA landscape? How do publishers you're working with think about spending on different channels to drive people to web shops as opposed to, through in-app purchases within the app stores themselves?
Yeah, for some games it's kind of still pretty early, but I see the mid-core and hardcore games that are pushing this almost like, well, 80-90% of their player base to web shops, and then honestly their own web portal or whatever, so they can bypass the 30%. It makes a lot of sense, right? And this is going to be such an important part of the whole UA, because you're getting additional money, right? So yeah, it's very important. It's very, very important. On the other hand, it's kind of, you need to think about like there is still like a step in between, so you can have a lot of people churning out into between, but it's still worth it for sure.
Okay. So Matej, maybe the one question I could ask you then is for maybe the audience out there who are game developers or game studios that are looking for a typical launch today. Like, what are typical budgets that you're seeing? Like, how much money should you have ready? And I know of one successful game where I believe they spent like 5 million in their launch. And so like, is that typical, or how much should a game, and I understood there's going to be different factors that impact that budget, but maybe you could talk through what are the typical factors that go into determining a budget for a game launch, and what are some of these rough numbers from your perspective?
Yeah, so you have you need to have different scenarios for global launch, because usually the global launch plan is you have you launch a game, you can throw that plan A out of the window because everything just changes immediately. So you need to have plan A, B, C, D, and then some other backup plans as well. So that's why I usually have 3 different budgeting scenarios, maybe 4, based on the goals we have. So as I mentioned, so we have the different day 0, day 3, day 7 ROAS goals. If we hit those goals, I don't know, 10K a day. We are hitting the goals. Okay, let's move to 15K a day. If we are hitting the goals, let's move to 20K a day, and then gradually increase the budget. So the times where you had 5 million and did a big splash launch and then scaled back, I think I believe it's over, and it's I don't know, few years back, 5 years ago or something like that. Now it's more like gradually launching. So usually I have these scenarios. So you have small budget, around like a couple of hundred thousands per month. Then I try to aim for 1 million, 5 millions, and then you have the scaling budget somewhere there, like 10 million a month, based on the numbers you can actually achieve.
Right. So it
and
sounds like
you are moving somewhere in between.
Right. So based upon the different scenarios would dictate a certain daily budget.
Yeah.
And so, and then based upon your daily budget and your projected, your payback window,
Yeah.
then that would determine that's how much money you need to have before you start seeing your money back, essentially.
Exactly.
Use
And also,
the profit bros, the finance bros language. This is all about path dependencies, right? That's the term that you'll hear a lot from economists and whatnot. And it's exactly this, right? It's rather than, being nailed down in specific scenarios, evaluate at the different steps and be ready to, and have a plan for what happens at each step and go from there. So you, rather than, assuming something will happen, you're ready to react based on how things play out.
Matej, as you're looking at the space and particularly games that are just launching, are you noticing any similar qualities amongst those games? And that could be soft or hard qualities like the genre or like the founding team, or what do you think is driving success in this market?
Well, I think genre expertise is driving a lot of success. If you have that, then you can launch basically anything. You can see the raw match, how they launched. You have the Monopoly Go, which is interesting. It's definitely different from whatever I saw. And then you have these different companies coming from China, like or South Korea or Asia, basically. You have like we discussed, Frozen City, Whiteout Survival, which is like not killing it, 20 million a month. And
more?
Even more, even more nowadays. And you have strategy games. There is the Kingdom Guard guys that are pushing it so much now. Rush Royale is killing it as well. So honestly, it's a combination of different things. The marketing is a very big part of it, but you have to have the genre expertise and like having the best possible product. Obviously, like fucking cliche, but like if you don't have the good product, you can't spend against anything basically.
So Matt gave a little read through of G5, and I think I looked at Aristocrat maybe like 3 or 6 months ago. That was also a pretty good read, like demonstrable progress in driving margin leverage through reducing UA. Do you think that that's contributing to some games having some success, like pulling users away from games that might be a little bit stale or have pulled back in that cadence?
Could be. I know also, for example, the case of Redecor. So they were spending quite heavily after the acquisition. And then suddenly out of nowhere, they just pulled back the spend to zero.
Playtika?
So so they could actually get the money back because they're still like the revenue stayed flat. So they were earning like a lot of money, but they were spending zero basically. So it's like, oh, well, okay. So we had to spend this amount of money and now we're just turning the profit.
It seems like by and large, the public companies are the ones that have had to chip back on UA budgets. So that would also be incremental to like the Take-Two Zynga ecosystem as well.
Yeah.
So I guess like geographical thematic, you're seeing a lot of strength out of Asia in particular on the developer side. Any signs of hope in Europe and US?
It's from what I see, not that much.
No?
Not that much. I mean, Asia is like far ahead of Europe and US in the mechanics, the marketing tactics, like, and they Whiteout Survival literally took Frozen City game, they put it into the game as an onboarding funnel, and then when you hit level 7, it just zooms out, and it's a fucking strategy game. It's so clever. Like nobody was ever thinking about this in US or Europe. It's really like they're far ahead.
And I think in particular, the Chinese are just they're at another level right now. So it is what it is. And then Europe is moving more towards 4-day work week. So
yeah, exactly. Let's chill. Everybody's like burned out. We need to work less, which is fine. Whatever. Exactly.
All right. Well, I guess
nice.
I don't think I have any questions. I don't know, Matt, Brian, if you have any other questions. And if not, Matej, do you have any last minute words of advice, or maybe you can also let people know how to get in touch with you to Sign
Yeah,
up
yeah.
for the
Sign up
Matej
for the
Lancaric
newsletter. Yeah,
services.
it's
Yeah.
brutally honest newsletter. No, jokes aside, so UA is definitely not dead. It's harder, and it's gonna get even harder as we go. But it's a part of the job, and everybody needs to work a little bit harder and try to find workarounds. If it's playables, if it's TikTok, if it's Applovin, different campaign types, it's just this is how it is. So if you are focusing on Facebook these days only, stop it. Expand,
Yeah.
diversify, and that's the way to go at this point. And if you want to reach out to me, it's lancaric.me, lancaric.me, or sign up to 2.5 Gamers YouTube channel.
Lancaric.
Lancaric.
Lancaric. Getting closer.
Nice.
Getting closer.
Yeah, I know. All good.
All right, everyone. Well, from the Pixel Brothers and Matej Lancaric.
Hey, nice. Thank you very much.
We will catch you next time. See y'all later.
Thank you very much for
Bye.
having me. Cheers, guys.
All right.